Hi there, welcome to Nepi Invest. Elton John said it best when he sang Goodbye Yellow Brick Road, and it seems like the ASX will be saying goodbye to the company Yellow Brick Road because this company has requested a voluntary delisting from the ASX, and in fact, they are blaming investors like you and me for their ASX demise. I'll get into that or their reasoning during this video. Now, to be honest with you, I have been following this company for about 10 years. And the main reason I've been following this company is because they have been growing in terms of cash receipts and revenue. So I've just been waiting for this company to hit that very important inflection point of becoming profitable and free cash flow positive on a continual basis. But they have never achieved that. And this company just continues to disappoint. So let's have a look at Yellow Brick Road. Now, this company is a financial services company, something like that. In fact, this is their website. If you go to their About section, they should describe what they are. Yellow Brick Road helps Australians on the road to their hopes and dreams. Now, that tells us absolutely nothing what they do. But then in the next sentence, they say, we offer competitive rates, an all-encompassing portfolio of mortgage broking services, and a network of trusted home loan experts all over Australia. Now, the CEO, I think even possibly the founder of this company is Mark Burris, and I'll show you a quote from him that was in the AFR today. But on to this particular announcement, voluntary delisting from the ASX. And what I found really interesting about this particular announcement, apart from the very fact that quite a few companies are wanting to voluntarily delist from the ASX because the share prices of these companies have tumbled, and that's not really the market overlooking the company. It's not really the market not understanding the company. It's just underperformance, financial underperformance of the company. So Yellow Brick Road announced that it has formally applied to the ASX requesting its removal from the official list of ASX. And then in section 1 here, we have reasons for seeking removal from the official list. And point A here is trading price does not reflect underlying value. And what they have here is a table of the net tangible assets over the last 4 years at the 30th of June in each of these years, and the NTA and also the share price at the end of the financial year and the share price discount to NTA. And the first thing that should be fairly obvious is the NTA of this company per share has been dropping every single year. Back in 2020, it was 16 cents, and now it's 13.86 cents. So what do you think has been happening to the share price? It's been dropping in line with the dropping NTA. This makes complete sense. Share price has been quite volatile, so 7.8 cents, 8.5 cents, 9 cents, now down to 6 cents. But the discount to NTA has been around about 50%, give or take 10% or so. So the whole reason why the share price of this company and the valuation of this company is a discount to NTA is because the company is not performing as shown by the drop in NTA every single year. I have no doubt, with almost 100% certainty, if the NTA was increasing every single year, the share price would be increasing every single year. And there is potential that the discount to NTA or the share price discount to NTA will not be there. In fact, there could even be a premium because this is what the market is looking for. The market, investors like you and me, do not want to invest in companies that are losing their NTA, their net tangible assets. We don't want to see companies whose equity is dropping each and every year. We don't want to see companies who can increase their revenue every single year, but remain unprofitable, remain free cash flow negative. So, upon the release of this particular news, the share price of Yellow Brick Roads, understandably, has dropped 10.34%. And this is to be expected. And to be fair with you, if we have a look at the share price of this company over the past, well, since it relisted on the ASX back in 2011, share price has been under pressure. Share price did get to a high of about 75 cents back in 2014. So it's only about 9 years ago. And you can see the share price just dropped off like a rock in 2014 through to 2017, and it's kept on dropping. In fact, the share price right now is almost at an all-time low. Our share price did get down to 5 cents back in the COVID-19 financial panic, and then we saw a nice bounce. Share price went all the way back up to 14 cents. But now it's back to its all-time low. And the main reason behind that is because of a lack in performance in their financials. And you can see that if we just have a look at their most recent financial year results. So let's have a look at their financial year results. Now, I don't completely understand this company, but revenue dropped a fair bit. So total revenue and other gains dropped from 306 million to 186 million. So revenue of 186, just don't even think about that drop in revenue, but $186 million of revenue. You'd think this company would be profitable with that sort of revenue. Only the sort of tech companies in America who are trying to grab as much ground as they can, get much customers that they can, are still spending like crazy, who are not yet profitable with that sort of revenue. In fact, some of these companies have revenue of $3-4 billion and still not profitable. But straight away, the first line of the expenses, commission expenses, excluding trail PV movements, 189,000. Straight away, this company is not profitable based off that. In fact, this company was loss-making by about $5 million. That's excluding the income tax benefit. So again, loss-making year for Yellow Brick Road. If we dig deeper into the balance sheet, net assets or total equity of this company dropped about 3.3 million, down to 37.7 million. So this is why the market and investors like me just don't want to buy this company, because they're not performing financially. The equity keeps on dropping year to year to year. In fact, if I go through and look at the yearly equity of this company, this is Yellow Brick Road equity going back to 2012. In fact, it has been dropping since 2015 when it did reach a peak. And remember, that was a time when the share price of the company started to fall. And that's the time where the equity in this company started to fall as well. That year, equity was $80 million. Now it's down to 37.71. So equity in this company has halved. There was a massive drop in equity in 2019. I'm pretty sure that was a pretty big write-off. And we can actually verify that by looking at profit that year. So let's put a profit. Yep. So equity dropped from $73 million to $35 million in 2019. And that was a year they had a loss of $37.4 million. So it was a write-down because this company is just not performing financially. That's why, that is the only reason why the share price is floundering. They also gave other reasons, which I'm not going to get into. They talk about liquidity, limiting trading and liquidity. They also talk about how the valuation of this company now is like $20 million and fund managers just don't want to buy this company because the valuation is so low. So in fact, and raising capital will be highly dilutive. So, which makes sense because the share price keeps on dropping. And if they do have to raise capital because they are loss-making, burning through cash, they might have to do capital raising. It's going to be highly dilutive because share price keeps on dropping. And it just gets me that they actually believe and they say that this company is undervalued and the market is just not appreciating this company. And in fact, Mark Bouris says, this is via AFR, that Yellow Brick Road is misunderstood. And he says the misunderstood nature of the mortgage broking business is to blame for investors steering clear of his company and going private is the only way to fix the problem. No, the reason, again, investors are staying clear of this company is because of underperformance financially. That's the only reason. If they were performing financially, the share price would be rising. The market will be interested in this company and Mark Bouris would have nothing to complain about. So he's putting the blame in Yellow Brick Road's misfortunes to the wrong people. He should be blaming himself and management of the company. So that's all I've got in regards to Yellow Brick Road. No longer will it be listed on the ASX unless the shareholders say this is ridiculous. But I doubt it because I'm pretty sure Mark Bouris, if we actually look at this, he is the largest shareholder of this company. Let's have a look at the ownership. Sandon Capital, 19.6% shares held, and Mark Bouris owns 16.9%. Pink Platypus, 15.2%. Agmanita Capital Partners. So it does look like there are some investing advisors holding this, corporations holding this, not many individuals. But anyway, that's all I have for this particular video on Yellow Brick Road. So Elton John said, goodbye, Yellow Brick Road. It looks like the ASX will soon be saying goodbye to Yellow Brick Road as a listed entity on the ASX.